Aloha YouTube, it's Brendan from Market Makers. Guys, happy Sunday everybody. My Bitcoin video most likely just went out just before this video, so that's exclusively crypto. Here we're going to talk about the equities markets. As you guys know, I love trading in the equities. They respect TA, less easy to manipulate, although all markets are manipulated, so always be aware of that. That's the whole premise of Wyckoff method. That's why Wyckoff invented his method, to show you and teach you how money moves through the markets. Guys, SimpleFX is sponsoring this video, up to a $5,000 deposit bonus on your first deposit. Use our link in the video description, the tutorial of how to use the platform. If you're not familiar with these types of exchanges, that's also in the video description. I love their UI. It's a great place to trade. Check it out, guys. They also do have an app available after you register you can download for your phone. And let's talk about the equities. Guys, last video I left you with all of this volume divergence, right? All of this volume divergence. Now, even with volume divergence, you can get pumps and you can get tops. Look at this last move up here. This was a volume divergence move. We went over that last video. 12% move up. Now, as you guys know, if you are in our Telegram, which the link is in the video description for signals, I posted a signal, and since then we've had almost a 6% move from my entry. If you got in lower, as much as a 7.59% move in the S&P, because again, you can rally even with volume divergence. The main difference is, guys, the main difference of rallying with volume divergence is you make your Wyckoff structures. You make your Wyckoff distribution boxes here, and I can show you this really quickly. You have your your buying climax candle, you roll back down. There's your base, and then you can see you fall out of your structure because you didn't have, look at the volume down here on this overlay, all grayed out candles dropping left to right. You did not have the buyers there to confirm the price move. You fall apart, fall through your whole 55, roll back down, and then look at the overlay again. And I'll show you this here on the actual volume as well. You can see this. Here's my lines. The volume again is very depressed. Look how tiny. The biggest candle in trend. Look at the volume candle for that candle. You see that? Look at the volume candle for the biggest pump candle in trend. Massive volume divergence, guys. This is the S&P, the broader market. So when I do long, guys, when I go to long markets, when I see rallies forming, I long the S&P. It's the strongest. It stays the strongest longest, just like in .com, okay? It stayed the strongest longest. And you can see on our money flow index here, this is money flowing into the asset, a volume-weighted RSI. You can see this is still oversold. We could still have some more moves up. We're going to look at the resistances. Our CCI gave us a bullish cross. We have a buy signal here, but there's no force behind the move, right? This is my elder's force. There's no force behind the move. This is a price volume duration calculation. Not a lot of force yet. We'll see if this can pick up, but of course, let's go ahead and see what we're dealing with here, guys. Let's get a wave projection for this move, and of course, we can do this right here. Trend-based fib from that swing low to that swing high, down to the swing low, which that low is 36.36. This one's 38. $2 difference. So here we go. So this is my first target we talked about on the S&P. For those of you still in this trade as well, 4,028. Okay, 4,028 is my first target. We are trading at 39.12. Pre-markets will open. You can trade that on Simple this evening as well. Okay, so looking at this, 4,028. If we get to that target, guys, coming down from where I entered around 37.24, I can't get the exact one here. So if we can get to that target, we're looking at roughly a 9% move. If we get to the 1618, a 15.68% move. Massive move, guys. Massive move. Now, how high can it go? Can't tell because there's no buyers. So it could start reversing tomorrow, but I think you're going to see some follow through. Remember, we haven't had capitulation yet in the equity space, okay? We haven't had gross capitulation yet. You've had compression. You've had PEs compress, but we also haven't had earning revisions. Most of the big banks still have earnings going up for next year. So until that occurs, which may happen after Q2 GDP comes out. By the way, Q1 GDP was negative 1.5%. Atlanta Fed a week or two ago updated their projection for this quarter, which the report comes out this week coming up. Atlanta Fed updated it for 0.0, which puts you in a technical recession. Now, in every previous bubble cycle, recessions happen quickly. I am not surprised at all if we are in a recession, which is 2 quarters of negative GDP. Again, you hear them talk about unemployment, and then unemployment, just like CPI, is tracked differently now than it was in the past. But you hear them talk, you can't have a recession with such strong job market. Oh, yes, you can. Yes, you can, because the economy is not growing. It is slowing. We all see that. And guys, what we're gearing up towards is possible stagflation as the markets decline, as the inflation stays very high and the economy slows. And then a lagging indicator, just like moving averages, is what unemployment is. You will start seeing the uptick of unemployment. Larry Summers saying you need at least above 10% unemployment for a year to possibly get a clamp down on inflation, or several years of much higher unemployment than we have now. So we'll see how this plays out, guys. But for now, we're trading. So let's talk about trades. So if this was just a correction, by the way, if this was just a correction and you were going up, that's great, because you're still in a trade. I don't think it's just a correction. And again, the chart tells the story. Okay, you don't have any volume. If this was simply a correction, you were going up and going to a new all-time high, where are the buyers? The buyers have to step in. Because you don't have the volume, you're going to hit a key resistance level, just like we did in the past here, and start to form a distribution box. That could happen at the 1 fib 40.28. We got above the 618, so now we have a bias for reversal. So we're tracking the 1 fib at 40.28, the 1618 at 42.71, and we have our 45 angle coming down across here as well. This will be very, very key to watch, guys. So let's see how high the S&P can go, and then we can flip this around and look to close this as a downside position as well once we make a top. But if we do that, guys, it's much better to do that on these other indexes as well, the Nasdaq and the Russell, because of all the tech and overvalued companies. So again, volume divergence. Look at your volume. We finished yesterday's video. Look at your volume down here. Nothing. Look at that pump candle. I mean, I had to maximize this so you can even see it. You still can't see it. Let me show you on the colored candles here. There's your one of your smallest volume candles in trend on Friday. Okay, one of the smallest ones in trend. And look at the actual candle size you got from that pump. Again, volume divergence, guys. Let's go ahead and measure this out. Oh, by the way, you can see where we fell on the wave projection down to the 0.5 fib. If we bounce back over to the S&P, because somebody asked me how to do this, let me go ahead and show you this as well. Oops. Show you how to get the support where we hit. So I'd go to this top of the wave projection up here, down to this swing low, up to that swing high, and you found the 618, the most commonly retraced 2 fib. You see that? Remember, if you go beyond that, bias for a reversal, you were able to pull back into it and get above it. Okay, so that's how we got that support structure. By the way, also on the S&P and on all the indexes, I see my chameleon vibration is present. And I think I showed this on some of my videos last week, but I'll go ahead and show it again. This is my chameleon. And let me get my projection here for where this is going. Need that fib back up there. So this is where my target is for the chameleon at 42.71. So we'll see if we can get up to that 1618 at 42.71. If not, I'm looking at that 4,028. All right, Nasdaq, I'm ready for you. So same thing here, guys. We got to look. We hit our support at the 0.5, 11,057. You see that? Wicked it almost on the dollar. What is that? We got down to 11,038. So within $20, we got that. That's how accurate fib waves can be, guys, within $20. So let's go ahead and get our upside projection here as well. Look at our fibs. Again, I personally don't long the Nasdaq, and I don't long the Russell when we do have rallies because of the propensity of garbage companies in this index. Okay, so let's go ahead and measure this fib wave as well. Let's go here and here. 1 fib at 12,490, 1618 at 13,388. So we also have my chameleon pattern once again, I do believe. Let's see. Look at my measurements. Got a 385. And I got a 1.311. And this would come up here. Yep, there you go, the chameleon pattern. So this comes to the 1618, 13,388. These are fib ratios between the moves, and you can see this. So this is my pattern. This is my chameleon vibration, guys. This is something I came up with from pattern trading. And it is kind of a pattern that is able to replace a lot of different patterns because it operates off of fib wave projections, and I find it to be very accurate when it does appear. So this is where I'm tracking, guys, 12,490 and 13,388. And then if we make a top, start making a distribution box like we did previously, and both of these other volume divergence rallies that are in recent trend. This one was great. This is the one that I posted a trade for in the room, guys. Got that great dissension. These are my targets, what I'm looking for this to continue to rip, okay? I hope it keeps ripping. Get us to at least the 1/5, 12,490. And let's look at our indicators here as well, see how this move is playing out in the daily. So again, volume is dead. There's nothing here for the volume. Our CCI gave us a bullish signal. This is based only on price calculations, so this is why, because it does not factor in volume, obviously. So we did get a bullish signal here for price. There's no force behind the move. We are still in the bearish territory, although we did go into oversold territory. We're still in the bearish territory on the MFI. Guys, the Russell, this is the one that I really enjoy shorting. Look at this pump candle. And then I'll have to open this up so you can see it, but I'm going to draw an arrow to it. Look at that little tiny volume candle. Look at that. And then look at this pump candle, how the Russell finished on Friday. Let's go ahead and look at that really quickly. Look at this. There's your candle. You see that candle? That last candle in trend gave you this bar. Look at the size of the bar. I mean, it's just very obvious volume divergence. Again, the Russell has the meme stocks. I believe AMC's in there. I think Peloton's in there. This has the meme stocks, okay? This has a lot of companies that cannot handle interest rates rising, a lot of growth companies that don't actually produce revenue. So the Russell is always a great target, as is the Nasdaq, when the markets reverse. Because they are so weak, I do not long them, okay? But I do short them. So let's go ahead and look at some different things here as well. Let's go ahead and look at the rest of the indicators. So you have clear divergence here with the Russell, with the money flow. No money flowing into the asset. You see this? Look at the divergence. You got bearish divergence on this indicator. You do have a little bit of force to the move. You did get your bullish price signal for a buy, but you have money flow divergence with the Russell. Again, just a second level of bearish divergence. And again, there's no indication of where it will stop. Where I think it will stop is going to be at a key fib level. Okay, so if it reverses before that, we'll see. You still have your 618 above you. The Russell did not pump above its 618. So you still have 1776 above you, then 1860 at the 1/5. So you still got to flip 1776, hold it as support, and there's a chance the Russell may fail first because it's such a bad index. It may fail first. So I will be tracking this very closely. Let's see what happens Monday. Guys, on all of the indexes, of course, up here across the top, these are your holy grail trades. If we're able to pump to any of these, many of them are approaching their 1618. And if you see this is at 2012, and this is at 2075, your 200, 233, both descending towards your 1618, okay? So again, why is it a holy grail trade? Because when you hit them in a descending bear market and you do not flip them, you make a top, you fall through, you look for confluence, you fall through your whole 55, you look at your indicators, look at your volume. No volume up there on that surge. You see that? Look at this gray volume on my overlay here. Nothing here. You fall down, guys, and this is how you net big trades. I've done several massive trades now in equities this year because of these low volume routes. Minus 20% move, guys, on an index. These are massive trades, okay? So just keep an eye on that. Keep an eye on the indexes. Check out our Telegram if you want to get signals. Check out our Discord if you want to meet 10,000 other people. It blew up in a year. Thank you guys so much. Please do like and subscribe and enjoy the rest of your Sunday. Spend it with some family and friends, guys. Stop watching me in my ugly shirts. I'll talk to you guys tomorrow.